think we can start. So we have 36 people so far joining us, and it's only going to get bigger. So I think that's a good time to start. Again, thank you everyone for joining us for this webinar. Just a quick intro. My name is Motasim Zawawi, and I'm a product manager at Muzn. Muzn, we're an advanced data analytics company based here in Riyadh, Saudi Arabia. And we're working on building or developing a product called Focal, which is our AML suite of solution tailored to help MENA's financial institutions fight financial crime. And joining me here is Christophe from Dow Jones. Christophe is an EMEA sales director here at Dow Jones, which is a global data provider of best-in-class risk data for AML compliance. And we're very excited to hold this webinar. I think we have a shared interest, Muzn and Dow Jones, in helping MENA's financial institutions understand more about AML compliance. And mainly because here in the region, we've witnessed a growth in the last couple of years in the area of fintechs and emerging financial institutions. And this is why we call this webinar, we call it Demystifying AML Compliance, mainly because we've seen like very ambitious entrepreneurs going with these wild ideas on how to deliver best-in-class financial institutions. And they need, we've heard that the knowledge about AML compliance is still in its early stages here. So we're hoping from this webinar to shed more light into AML compliance, the best practices, and how to set up a compliance structure so that you can go to market with confidence. So the way we'll go, we'll start this presentation with a quick overview on AML and KYC from my end. Should help you see a quick background on this field. And then we'll dive a little bit deeper in the area of sanctions and data with Christophe. So I'll go ahead and share my screen here so that we can start. Christophe, can you confirm that you can see my screen?
Not yet.
Okay. Oh, I think it might be the browser. I'll hop off quickly. I come back in. Just give me a few seconds.
And whilst we wait for Motasim to join back, maybe a comment on my side, we'd like this webinar to be as interactive as possible. We'll save some Q&A time at the end, but please feel free to use the chat functionality on the platform to raise your question, and we hopefully can address those after the presentation. Thank you. For those joining, Motasim is having some technical issues, so bear with us. We'll kick things off in earnest in very, very quickly. There we go. Okay.
Okay, I'm back here.
Super.
Sorry, guys. I'll go ahead and share my screen now. Can you see my screen this time?
Yes, we can.
Okay, great. I'm glad that worked. Again, apologies for the inconvenience here. Again, so yeah, I mean, this the first presentation we want to go through is basically going through the process of AML and KYC for emerging financial institutions as well as fintechs. So, and I think to go to the very start, we need to go with the bigger picture, which is clarifying the AML and KYC framework. Those terms are usually, they go hand in hand, but it's very good to start with, a very quick description just to distinguish between the two. So know your customer, or KYC, it's a mechanism designed to verify and identify your customers with the goal of making sure that the person that you are onboarding, they're the same person that they're signing up with their information. So it's one mechanism under the whole AML umbrella. And the AML is essentially anti-money laundering, which is a set of frameworks and procedures designed to reduce the risk of financial crime and money laundering. So you can think about it as AML as the overall umbrella and KYC as the one set of mechanisms under the AML framework. And over the last few years, we've seen, again, we've noticed a growth in the fintech ecosystem. For like the last few years, it's been like 163% growth year over year. And all of these institutions, they share the same goal of simplifying financial services for consumers, as well as making easier for them to transact in an online environment. So they share the online environment and they share the ease of transactions. So unfortunately, the online environment, it creates a higher risk, more risk when it comes to identity theft. And when you incentivize consumers to transact, that basically increases the risk of money laundering. So you're basically simplifying the process, but at the same time, you need to address some of these risks before you go to market with your new financial products. And the general theme or general importance of this is that each financial institutions, they're trying to comply with the regulatory enforcements. So as the regulator allow more and more of these financial services to emerge, they need to impose more like stricter regulations, and with that comes even heavier fines. So the goal of financial institutions is to comply with these regulations, but also reduce the reputational risk when it comes to being called out by the regulator. And as these companies continue to scale and onboard new customers, they need to adopt more automatic and sophisticated solutions instead of manual procedures, so that they can adapt to this higher risk and more customers going into their in their customer base. And when we talk about AML KYC, the number one approach that follows it, it's basically the risk-based approach. And we'll talk more about it. So it's more of a mindset that compliance teams have to go by. So what does that mean? So the risk-based approach, it's a mindset that tells the compliance team to switch from adopting solutions to just primarily to follow regulations, like passively follow regulations, to more of a proactive approach where they ask questions about the nature of their business, where they try to identify the risks that are associated to their specific type of business. And how they do that is basically by being proactive and asking questions about the different areas that they need to address at first before implementing any solution in place. So it's not a matter of getting a solution and say that you're compliant. It's more of how do we design a set of procedures and controls designed to address the highest areas of risk that you have as a financial institution. And the reasons why this is important is because as you move forward in your journey, you basically see changing conditions. So that goes from geographic changes to product changes to business operation changes. And as the more you move down the road, you need to be able to continuously ask questions whether you're compliant, whether you're fitting any loopholes or gaps in your AML environment. So those are some of the samples of questions that the financial institutions want to ask, essentially before adopting any solution. So one is the business vulnerability, asking questions around, does this, does the nature of our business have any paths for money laundering or drug trafficking? If so, what are they? It asks questions about product vulnerability. Are there a set of products that inherently carry more risk than others? For example, fixed deposit have lower risk than a checking account product. Another question is you want to ask questions about the customer risk. So to give you an example, let's say you have a CEO and they have a salary of $50,000 per month. And then you have, let's say, an employee who has, let's say, $4,000 per month. And then let's say those two people, for example, they make a transaction of $50,000 per month. Which one has a higher risk? The CEO is obviously they have more money so they can transact more. But you need to figure out like who exactly is your customer is and what are the different roles or different controls that you want or rules you want to monitor these customers by. And the last one goes to geographic vulnerability, which goes to the point that not all countries carry the same risks, and financial institutions need to figure out which country they were working with and how they want to address the risk for each country. So let's go into some of the mechanics or the procedures of AML KYC. So usually the process starts with identity verification, which when you take the customer ID and their name, and then you validate that across an authoritative list of individuals' names. So in the case, for example, in Saudi Arabia, there's a service called Yaqeen, which scans the customer's name against the national list and make sure that that person actually exists. And the second process comes in, which is the area of AML screening. So you screen the customers against a global list of sanctions and PEP lists to figure out if this customer is high risk or not. And then it also involves getting more data about the customer. So that involves the date of birth, the nationality, the country, what products they're using, what channels, where do they exist, their source of income. And you take all of this information and you collect them together to create a risk score specific to that customer, which goes part of the customer due diligence process. So in that phase, you essentially want to figure out who your customer is and what kind of risks they carry with them. And this kind of information will help you later to decide whether you need to get more information. So if that person is considered high risk, you want to do an enhanced due diligence process on them and making sure that you're not onboarding someone who could potentially be risky to your business. And after you've done all of these set of procedures, you start the process of ongoing monitoring, which goes in the areas of transactions monitoring and daily screening of your customers base against global sanctions lists. So this is the overall set of procedures that financial institutions usually go by to address the risk of money laundering. So yeah, starting with the process is when you take the name, the date of birth, and nationality, and then you scan it against the authoritative database to verify that this person actually exists and you exactly know who they are. And then the second process comes in, which is identity verification. So you know who essentially signed up, or you want to make sure that the person who signed up is the same person that's in the database that you verified against. So that goes in with doing phone authentication. So that could be through a video selfie or a documents upload. Is that where you upload your national ID or your passport or any official identification document. And then the third part comes, which is the customer due diligence process. And the first comes part which is the area of sanctions screening. So you screen the customer's names against global lists, and then through names matching technologies, you can essentially get a list of potential matches, either from sanctions or PEP lists. And then this is where the compliance officer's role comes in, is that where they may need to make a decision based on the information that popped up as a result. So from there, they can decide, for example, they can look through the articles about this person, their country, their nationality, and then they compare it against the credentials of the customers themselves. And then the third part comes in, which is the customer due diligence process. So you take the AML screening result, and then you also fit into the occupation, the products, and the channels, as well as the geography of that person. And then you specify a specific risk score to that customer so that it tells you how you want to monitor this customer moving forward. So a quick example of some of these implementations. So during the sign-up process, the customer will put their information such as employment status, who's the employer, the sector, the position, and some of these requirements, it might differ from one company to another. So it really depends on the nature of the business. And once you have all of this information collected from the onboarding process, you'll get a full overview of that customer in your system as an AML team. And then after that comes the ongoing monitoring process, which is essentially around the area of transactions monitoring. And there are a couple of factors that companies need to take in mind, which is the customer risk. So you want to specify a certain rules for transaction monitoring for a specific set of customers. So you don't want to apply the same rules on every customer from low to medium to high. You want to make sure that for each segment, you have the right set of rules and thresholds to monitor them. And you obviously want to do some statistical analysis and testing on each segment so that you can figure out the optimal thresholds for each of these segments. So some of the samples of these triggers can be increase in frequency of transactions, increase in volume of transactions, unusual locations, as well as transactions with the sanctioned entities. And now I want to dive a little bit deeper into the best practices of sanction screening. So if we take a step back a little bit, sanctioning is a process of screening the customer's information against a global list of high-risk individuals. And then the goal of this process is for these financial institutions to know their customers and know who they are dealing with, and also preventing bad actors from the very start from accessing the financial services by the company. And usually there are three main types of lists. So there are sanctioned individuals. Those are individuals who have been associated with terrorism, money laundering, or drug dealing. And typically governments curate these lists. Some of these lists include UN, OFAC, EU, HMT, and there are a couple of other important lists. And there is the second list, or the main category, is the politically exposed persons list, which is basically anyone who's been trusted with the prominent public functions, and there are very specific definitions to that. And the third list is adverse media, which are essentially unfavorable information about someone who could have been, let's say, accused or any of that activities. And the main challenge when it comes to sanctions screening is that there's essentially no ground truth when it comes to entity information. So every time you want to onboard a customer, you want to assume a few things. One is that the customer information that are being inputted could be manipulated to a certain extent. And additionally to that, you could have some slightly inaccurate information on the sanction list. So you want to treat those two components as if they were not a hard evidence to a certain extent. So for example, if you have a customer with the name Muhammad H. Qahtani with this spelling, and you have them with this date of birth, and let's say you have someone on the sanction list with this credentials, you can see they have the same information, but they're slightly different. So as the financial institution, how do you tell that those two people are the same? And this is where the importance of adopting screening technology comes in, because it really helps you to figure out these minor differences and alert you if there is any, so that you can do your proper investigations and decide how you want to move forward. Specifically in Arabic, it's a little bit even more complex. And the reason is that typically you have names in Arabic, and if you transliterate that name to English or Latin characters, you can end up with more than 10 variations of that name. So if you have, let's say, 3 components name, and each name has 10 variations, then you can end up with 1,000 variation. which increases the complexity of screening your customers. And using like legacy solutions or basic search methodology will essentially could cause the financial institution to miss a potential hit. And when it comes to Arabic, again, there are also other challenges. Sometimes you're going to have, for example, multiple last names or missing components from the name or common misspellings. All of these different challenges of Arabic language increases the complexity of screening, which is important to have adopt these solutions early on so that you can be confident when you're screening your customers. And I want to go here through some of the gaps that we have noticed in the market with the goal of explaining what are the best practices when it comes to screening. So the first part is the watch list data. And we've seen a couple of financial institutions, they're going to market and they're only screening against the UN list, which is, it's not a comprehensive methodology. Whereas the regulations by SAMA and FATF basically says that financial institutions must screen against global lists in order to comply with these requirements, which is why it's very important to adopt a full and comprehensive and daily updated global AML data, which includes PEP and global sanction lists. And we'll talk more about that later in this presentation. The second part we've noticed is outsourcing. So we've seen financial institutions relying on banks to do their KYC. Now, this is a little bit conditional because it really depends on the nature of your business. Again, going back to the risk-based approach, which is questioning and asking questions whether there are any loopholes in your methodology, it really depends. For example, let's say you're a payment gateway and you are, let's say you're onboarding customers in your checkout page. And with that setup in mind, if you rely on banks to do the KYC, then there could be a chance where someone, for example, they input their customers' information and then they put their credit card with someone else's information, which is essentially being screened by the bank. So you're essentially not screening against the customer, but you're only screening against the credit card. So it really depends. You want to make sure that you really understand the nature of your business and your workflow specifically, and see if there are any loopholes that you need to figure out or cover. And then the last part comes in, which is the screening technology. So we've seen companies go to market and they use this basic search algorithm where they use essentially exact matching techniques to screen the customers. So in the case, let's say a sanctioned individual comes in and they slightly change their name with minor spellings, that financial institution will not be able to detect that customer as a hit, which is why it's very important for these companies to implement AI and Arabic-focused screening technologies to address these validation and these errors. And going back to some of the other best practices when it comes to sanction screening, you want to make sure that you're screening your customer on an ongoing basis against the most updated version of the sanction list. And the reason is that you could onboard a customer and then over time they can become sanctioned or they can become politically exposed. So when you are screening on an ongoing basis against the most updated version of these lists, you're essentially capturing any change that happens at any time moving forward. And you want to do audit trail logging, which is essentially you log in the screens and also the decisions that you took as part of your AML compliance procedures. And this helps you prove your compliance to the regulator if they ever ask you for your proof of screening. And then also it goes into the area of whitelisting. So as you onboard many customers, essentially you want to make sure that you're whitelisting the entities that are false positives. Because when you're doing ongoing screening on these customers, you don't want to get continuous alerts of these customers that you have of these entities that you have already screened and labeled as whitelisted. To help you grow, you also want to automate the process using APIs. And this goes specifically to companies that need to scale fast, but that really doesn't apply to all of the financial institutions because some of them don't need to scale very quickly. So this only is applicable to companies that want to scale fast or want to have an onboarding process that's seamless and doesn't delay the customer onboarding process. So this is pretty much the end of the first part of the webinar. And now we're going to jump more into the details of data and watch list and what are the best practices in that area with Christophe from Dow Jones.
Well, thank you very much, Motasim, and I'll tackle the technology first. Should be able to share my screen. Again, if someone could confirm that.
Yeah, I can see it.
So great, super. Okay, and I go into presentation mode. Super, great. Okay, well, thank you very much, Motasim, and again, good afternoon, ladies and gentlemen. So as you heard, my name is Christophe Amez. I'm the EMEA Sales Director for the Risk and Compliance Division at Dow Jones. And again, let me thank you for your participation today to this webinar we're hosting jointly with our partner, Motasim. So the advice I was given when putting together this presentation is try to provide you with some insight into the trends that we see in the area of sanction and AML compliance, but also discuss how this might impact you and your business now and also going forward. So what I'd like to do over the next 20 minutes or so is to carry on the theme that Motasim has spoken about, to discuss the regulatory framework and requirement that exists when it comes to AML and sanction compliance, but focusing on the Kingdom of Saudi Arabia. Then discuss at a high level the goal, components, and costs as well of implementing robust AML and CTF program. And also carry on the theme of the challenges around risk data by introducing you at a high level to some of the work we do in this area. So let me start by talking at a high level about the regulatory environment in Saudi. Now, I realize that quite a few of you are actually from outside the kingdom, but one of the goals of the meeting was also to update the community in Saudi on these requirements, since this is a market where Moz and Dow Jones are putting a lot of focus on at the moment. So Saudi recently strengthened its regulatory and legislative framework to combat money laundering and terrorist financing. And the Saudi Arabian Monetary Authority, or SAMA, is the main regulatory body for financial services in the kingdom. And it has made AML and CTF regulation one of its main priorities. The most recent money laundering and CTF laws were introduced back in 2017, with further guidance issued in 2019, according to our editorial team. So these laws provide a statutory basis for criminalizing money laundering and terrorist financing activities. And really many of the provision of the Financial Action Task Force, or FATF, the 40+9 recommendation, have been implemented into a local Saudi law. So let me first discuss the expectation, again at a high level, that exists when it comes to counterterrorism financing. And here, Saudi implements both the UN as well as autonomous sanction lists. And the following measures should be implemented by all regulated firms. So the screening of their customers' name against an UN and SAMA designation prior to opening an account and conducting a transaction. If a match is found, to potentially freeze the asset and report this to the local FIU. A regulated firm should also ensure that they screen and monitor, as we've heard, on an ongoing basis, their client against the UN list and any other SAMA issue list that also exists, but also observe sanction lists issued by other countries, check all transaction and transfers, again, these lists, depending on the currency of the transaction. The regulation issued by SAMA also covers obligations of regulated firms when it comes to anti-money laundering. Some of those have been covered, so I'll go over those very, very quickly. But these obligations always start and always include the need for risk assessment of each client relationship. This risk assessment, or the risk-based approach, as it is known, should incorporate an analysis of at least some of the following risks: the transaction risk, product risk, customer risk, and the geographical country risk. Similar to many other jurisdictions, the expectation of SAMA is that those customers' relationships which bear a higher risk should be subject to enhanced due diligence. That means going above and beyond the onboarding process, but also including that you have clear, distinct process for ongoing monitoring of these clients and their behaviors. A type of potential high-risk customers are politically exposed people or PEPs. Now, in this area, SAVA does provide some information about what constitutes a PEP. And namely, it talks about regulated firm understanding, and I quote, if the customer is or has been entrusted with a prominent public function within the kingdom or in a foreign country, or is holding a senior administrative position within or for an international organization. Now, the law also includes the following roles or function. So I'm not going to list them all, but it gives specific job roles like head of state, senior politician, senior executive state-owned corporation. And it also extends the requirements to the relative and close associate of the PEPs, because often this is where the real risk lies. So it talks about PEP relatives, and that refers to any natural person related to a PEP by blood or marriage, up to the second degree of kinship. And also talks about close associates, where here it refers to any natural person who share benefits with the PEP through a real partnership in a legal entity or legal arrangement, who has a close business relationship. So what we are seeing in Saudi, like in many other countries, is that whilst the requirements exist and are being expressed as to what constitutes a PEP, they still remain, however, high level and one could argue fairly vague. And this is something that we see across the MENA region, and you could argue across the world, as this table produced by our editorial team shows. All countries listed on this table call for both domestic and foreign PEPs to be identified and monitored, and all focus on the PEP being a prominent person by their role. Our analysis also shows, however, as I said, that there is no universal definition of what a PEP is, which makes life difficult for compliance officers, especially if your institution operates across several markets or several jurisdictions. And one of the trends we are also seeing, there's an increasing number of regulators around the world that are going beyond this high-level definition by also calling out more local and more junior PEP as part of their requirements. And we will discuss a bit later on how we help clients translate these vague requirements into procedures and control with some of the risk data we provide. So let me now move to talk about the goals, the components, and also the cost of implementing those AML and CTF system. And the first thing to say is that an anti-money laundering and counterterrorism financing program is an essential component of a financial institution compliance regime. But what is the purpose of such program? Well, I would say it's pretty obvious, but the primary goal is to protect an organization against money laundering, terrorist financing, and other financial crime, and also to ensure that the organization is in full compliance with the relevant laws and regulation. And I think for that reason, designing, structuring, and implementing this program should be a top priority for any financial institution and any regulated firm. Then there are some 4 pillars or basic elements, if you like, that must be addressed in an AML CTF program. So what are they? First one is you need to have a system of internal policies, procedures, and control, what's known as the first line of defense. Then you also need to have a designated compliance function with a compliance officer. That's your second line of defense. An ongoing employee training program, and an independent audit function to test the overall effectiveness of that AML program. A sound KYC and customer due diligence program is also one of the best ways to prevent money laundering and other financial crime. And really, knowledge is what the entire AML CFT compliance program is built upon. And the more an institution knows about its customer, the greater the chance of preventing money laundering abuses. So let's talk about these elements of a KYC CDD program. Again, we'll share the slides, so I won't go through all in detail, but essentially, as we've heard, it's all about identifying the customer and verifying the customer identity, identifying the beneficial owner and taking reasonable measure to verify also the identity of that beneficial owner, understanding and obtaining information on the purpose and intended nature of the relationship, conducting ongoing due diligence on the business relationship, and keeping an eye on the transaction undertaken throughout the course of the relationship. And of course, sanctions list screening and PEP screening and monitoring, which is also a key requirement. So what I'd like to do now is talk about try and attach some cost around building those AML and compliance program. And the investment really into this program can be sizable. And there are typically three main components in our experience to such program, which typically are the people who will be required to implement the processes, the control, to review the alerts generated, to investigate, and so on. The software required to screen client and transaction, and the structured data that's going to feed the system. So can we put a cost to all of that? One way of measuring this cost, this impact, is looking at the people cost. And a rule of thumb would indicate that institution using a good screening vendor should expect at best 1% matching rate for every 100,000 record in a commercial database when checking against all risk categories. So let's look at that table on the right to try and make sense of it. Here we have two examples, two commercial databases. One, for example, with 500,000 record, and another one with 900,000 record. The customer base to be screened is 1 million. So if we apply this rule of thumb, we probably will expect a 5% match rate on one side and a 9% match rate on the other side. In terms of alerts, that translates into 50,000 or 90,000 alerts to clear and review. And if you apply a 2-minute review for each alert, as you can see, this represents a man effort that almost doubles from one case to another. So I think the table below illustrates that compliance costs grow directly in the relation to the size of the commercial list that is being used, and the fact that will need to be taken into careful consideration by those responsible for recruiting expensive and scarce compliance staff. I think also this example shows the benefit of focusing on keeping the record from the commercial list as low as possible when screening for AML to reduce the number of hits, whilst at the same time ensuring that a significant risk is not missed. And this is where vendors such as Motasim and Belgians can help, of course. The deployment of quality systems and data and the application of granular data structure are keys to enabling institutions to significantly improve the effectiveness of their screening whilst keeping people costs to a minimum. And as someone said quite famously, if you think compliance is expensive, before I go into the quote, I mean, it's true that compliance is often seen as a cost center with no clear return on the investment required. And of course, this is not the way to look at it, as the main goal of this system, as we said, is to protect the institution and prevent issues. And we all know that prevention is better than cure. But another way to look at that angle is to look at this quote, famous quote by Paul McNulty, who was a former US Deputy Attorney General, who once said, if you think compliance is expensive, try not compliance. And 2020 was a historic year, again, from the regulatory environment with, according to my source anyway, over 10.5 billion worth of fines being issued for AML-related offenses. And what we've seen is that regulators around the world became a lot more punitive, demonstrating billions of dollars of enforcement action being imposed, with the largest one, of course, being the one going to Goldman Sachs, with over $6.2 billion, I think, as part of the fallout of the 1MDB scandal. So I think with this level of enforcement and regulatory pressure, it's more important than ever for financial institutions and other firms to harness technology to automate their AML, KYC, and CTF processes. So moving into the theme of best practice and how to tackle those challenges in practical way, how do we help? So I'm just going to talk a little bit about the work we do, but as a brief introduction, Dow Jones is a news organization. It's a media company. Whilst we're known for the index, we essentially are a news outlet, as I said, with the Wall Street Journal being our most famous publication. Our division, Risk and Compliance, started about 20 odd years ago at the request of a bank. And essentially our mission is to help customers, and it's quite a lot of them, to meet various regulatory requirements but also to remain compliant. And we are going to do this through data, technology, and services, simply put. Oh, I seem to have lost. My computer has frozen. Can you still hear me?
Yeah, we can still hear you.
All right, I'll move on. Okay, so I want to talk a little bit about what I call the foundation of the business, which is the how we do what we do. Because you talk about data, and for us to go and reference someone or something to put them on the list, it has to be from open source material. And yes, we leverage AI and machine learning and clever software to help us do the research, but we also have people, because that's the best way to decide what goes on the list and what doesn't. So we have a very sizable team of researcher, editors, as we call them, more than 400 across 5 centers around the world, which means that we are always operational, which is really important, particularly when it comes to updated sanction data. So over 400 people, 70 languages, including Arab speakers, of course. So if the only piece of information we can find is in Arabic, in Chinese, Japanese, just about any language, we will be able to make sense of it and exploit that piece of information. Oh dear. Right, I think I'm going to stay like this. We also have access to unique resources. We own a news archive called Factiva. Some of you may be even using this as a research tool. So it's a news aggregation service, and we are going, of course, to use this to proactively and reactively look for people and company to fit our coverage. So what we're seeing here is the visualization of the risk data categories that we reference on our list. Again, bigger is not better. We don't have the biggest list. We do not want to have the biggest list, and neither do our customers. So more names mean more matches and alerts. But you will see that we make editorial choices as to what we cover and what we don't. Also, we don't have an approach as one size fits all. Customers will always have the option to slice and dice the data and use only part of the list that is most relevant to you, your institution, and your risk-based approach. So let's review again at a high level those risk categories. And really, we should be presenting it as a pyramid of risk. So at the top of the pyramid of risk, you will have all your sanction lists and other official lists. Those are free to all for access. We go and reference a lot of those. There's more than 1,300 in our catalog of lists, if you like. But the value we had is that we go to the sources, we aggregate, we consolidate, we normalize, and we enrich the data. Update of those lists is crucial. Back to the 5 centers around the world. And we also publish stats. And in the last rolling 12 months, we noted more than 2,000 regulatory updates on the main list, UN, OFAC, EU, UK list. And in 99.7% of the time, change on any of those lists that we monitor were within our solution in a matter of hours. Okay. Now, one thing that is very, very topical is sanction by extension, the OFAC 50% rule, whatever you want to call it in the industry. But essentially, since 2014 and the sanction imposed on Russia when Russia decided to invade Crimea, there's been a new challenge because on the back of the invasion, the community reacted, put sanction against Russia, key people close to Mr. Putin, companies key to the Russian economy. No big deal, you could argue, a few hundred names to screen against. But the challenge was that as part of your diligence, you're also required to know if you're dealing with the companies that is owned or controlled by those sanctioned parties. There is no list, that'd be too easy. So we've responded to this challenge by researching and identifying those companies. We call them sanctions, control, and ownership, which is a subset of our data set. And we go and identify companies that are owned or controlled by sanctioned parties. We have a definition. Owning means having 10% shareholding and above, not only at the individual level, but at the aggregate level. But also we will look for the notion of controlling interest, meaning that if I'm sanctioned under one of the OFAC program, I'm on the board of a business and I have no share, I can still control that business. So we applied that definition and we've identified over 25,000 companies all around the world meeting those editorial criteria. And the use case is not only KYC, but also transaction screening. Now, in the area of AML, and this is very much how we started into this business, This slide visualized our approach when it comes to identifying politically exposed people, or PEPs. So when UBS come to us and say, please help us identify those PEPs, back to the point I made earlier, there is no such thing as a definition, universal definition. So we looked at the guidance, the regulation, and we came up with our own definition made of 22 job roles that our research team will apply proactively around the world. Now, the benefit of this approach is that you may have your own risk-based approach, and you might say, well, we don't quite agree with you, Dow Jones. We only want to screen against 6, 7, 10 of those. And because of the high structure of the data and through technology partners, of course, you can pick and choose part of the category that are most relevant to you. And the same applies to the network of the PEP, the relative and close associate. Same thing here, where our research team will go and identify a network of the PEP. So here we're talking about people directly related, husband, wife, siblings, but also the less obvious and the riskiest, the friend, the political advisor, the financial advisor. Moving into the area of adverse media, of course, we are going to reference people with bad news. Here we label those special interest persons, but we're talking about really potential heightened risk here, because we go and identify using Factiva or News Archive, people that have been arrested, charged, or convicted of crime. And we're talking about the greatest area of crime, the one you should be most concerned about: so financial crime, tax crime, corruption, organized crime, and so on. It's about 700,000 people all around the world that we've identified according to our definition. And we also see a trend where companies want to also look at their supply chain, look at their third party to do the right thing. There's a big focus on fighting modern slavery, ESG risk management. So we also identify companies that have red flags or adverse media attached to them as per the definition that you see on that slide. Moving on, final content set to talk about is a global list of state-owned, state-controlled company. Again, the story there was we got approached by a group of customers, and the main use case was fighting bribery and corruption. So we created a list of state-owned, state-controlled company based on a definition that you see on the screen. Final thing to say before closing and handing over for question. Data is one thing, creating data is one thing, but updating it, producing it of the highest standard and quality is what's vital. And we are known for the quality of what we do. Is it just sales talk? No, we define quality. We talk about content, which is complete, up to date, and accurate, and we measure that internally. And we also the only provider, to my knowledge, we get our content, sanctioned content, independently reviewed and audited by one of the big four for quality and accuracy. So we put our money where our mouth is, as they say, and we share that report, which costs quite a lot, with customers who can use it internally or externally as part of their reporting. Final thing to talk about before we hand over: how do we access that data I've been talking about? Well, just about any way you want or need to, from the simplest manual ad hoc lookup tool with our online risk center, all the way to data feed and API for integration, also with our own screening platform. And of course, we'd be happy to carry on the conversation depending on any specific question or needs that you may have. I will stop now. I hope you found some of the comments interesting, maybe insightful, who knows, and we welcome any question that you have in the last 10 minutes or so of the webinar. Motasim.
Thank you, Christophe, for the comprehensive presentation. So yeah, I want to open up the Q&A for the attendees. Feel free, if you have any questions, write them down in the Q&A section, and we'll read them through to answer them. So we'll take a few minutes here to go through that. So we have one question here, so which says, how do you tackle the issue with name difference from Arabic to Latin? So very good question. So we use a combination of technologies within the area of AI. So primarily, for example, we use a combination between phonetics, which are describe or tell you more about how the names are pronounced. So if you can figure out the Arabic name and how it's pronounced, you can essentially match that name against all the other different variations of the name in the Latin character. And we don't primarily rely on, let's say, only phonetics. We also use, let's say, edit distance, which figures out the very minor character differences. So we use a combination of edit distance as well as phonetics and AI to be able to match against between the Arabic and to do the transliteration from Arabic to all the possible Latin names. And then from there, we do the matching against the entities on the sanctions lists.
If I could maybe add one comment on the content side, is the technology, the content. Again, it is a very good question. And not only do we produce a database which is been Romanized, but the team will also include the original script name. So I talked about the 70-odd languages. If we find a name in Arabic, in Cyrillic, in any other character or script, we will include that as well in the detailed profile. So we have customers who use that field to screen against the original script name.
Thank you, Christophe. We have another question is, at what stage should organizations start thinking and implementing compliance protocols? It's a very good question. What we have seen that usually compliance is an afterthought, where it's like you have bold, ambitious leaders. They want to go to market. They want to build a product, which it's very respectful. However, we always say that it shouldn't be an afterthought. It should be thought about from day one. And the reason why we say this is that as you grow as a company, or as you start as a company, you'll learn more about your niche or your specific product, your specific market, your specific risk. So you really start learning more about the risks and what kind of potential gaps that you need to address. And the sooner you start, the earlier you can essentially fill in these gaps, and that prepares you very early to scale. So once you start tackling these gaps early on, you can essentially go to market with more confidence, which is essentially the goal of AML compliance, to be confident that you are operating legally and also reducing the risk of financial crime whenever possible. Okay, so we have another question here. It says, you mentioned the importance of quality, the data quality for AML sanction process. How do you know that your content is as precise and up-to-date as can be? That's for Christophe.
Yeah, it is, yes. And again, it's a good question. As I said, no point creating list unless it's of the highest quality. So I think the methodology that we apply are going to be different depending on sort of content set you're looking at. When it comes to sanction, as I said, we make sure we have monitoring processes in place, alert, we proactively go and check what we call our portfolio of priority list twice a day. And as I said, the independent review that gets carried out with one of the big four every year. For other categories of risk, for example, PEP or the bad guys, it's a case of having the tool, the processes to stay on top. For PEP, for example, we keep an eye, of course, on what's happening in the news. Unfortunately, there's a lot happening in the news with change of governments in the region. If there is a coup or an election or whatever is going on, we will reflect the database as quickly as possible. And for those administration that are more stable, we'll make sure that regularly we go and review the PEPs to make sure that the person in question is still in the role that we have them for on the list. So that's what I would say with these processes. It's high editorial standards. And again, don't forget, we're known for high quality news through the Wall Street Journal.
Great. I have another question. It says, how often should organizations revisit their compliance tool? Should they follow news and trends or preempt and be ahead of the curve? You want to take that, Christophe?
Well, I think, yeah, I'll have a go. It very much, I mean, I said, processes take time to implement, can be expensive, investment as well, quite high to put those things in place. But at the same time, things do evolve. So I think we see that it's important for institutions, whatever they've put in place, first of all, to tune it to your risk-based approach. Some banks were fined for just rolling something out that wasn't fit for their institution, but keep abreast of what's changing. There's a new entrant, there's a lot of new entrants around technology, a new type of challenges around content. So make sure that you have those regular conversations with players in the market to make sure you're aware of the latest technology, for example. So that's what I would suggest.
All right. And how do you see regulatory requirements evolve over the next few years?
Yes, wow, that's the big one, isn't it? And I forgot to bring my crystal ball with me now, but I think so, more seriously, it's not going to go away. So you could argue it's, someone said there's two certainties in life, maybe what was it, tax and death, or maybe a job in compliance is the third one. I don't know, but it's not going to go away. So the need for AML compliance professional will remain. Sanction is going to remain key. For example, we thought with the change of US administration that things might change. They haven't. There's still a lot of tension with China. We don't know what's going to happen around a new deal potentially with Iran. So it's very fluid, and sanction is a foreign policy tool. So that's not going to change. Also, there's other type of risks. AML is not going away. As I said, PEPs, we see some regulator lowering the bar, asking the banks to screen for very junior PEPs. So that's both challenge for us, for customers. New type of risk, fighting modern slavery, fighting corruption. So that's my prediction, but it's not going to go away.
And we got a question about data. So according to what exactly you update these sanctions lists, as not all lists are applicable for all countries and can change from time to another?
That's right. And we have, if you look at our customer base, we have over 4,000 customers around the world. So from a coverage perspective, we have to cover just about any list that sanctions regulatories that exist out there, which is why our catalog of lists is pretty large. The way we keep on top is, as I said, we work from a portfolio of priority lists. So your UN, OFAC, EU, UK list and the like that will be proactively monitored. For all the others, we subscribe to an alerting system. We have very strong processes to make sure that we are as reactive as possible. And I think, as I said, 2,000 regulatory updates over the last 12 months, 99.7% of the time, a change on the list was in our solution within hours. So we need the people, the tool, and the processes.
Yeah. Let's see more questions. To Chris, what industries, in your opinion, should worry most about compliance other than banking sector?
It's a very good question. We see, I would say one interesting point is that sanction compliance is not just for banks. And we saw, I think it was last year, US Treasury, they're often the most vocal and the most one hitting hard, came out with a guidance notes, basically talking to the corporate sector, saying that you also need to look at you also need to have sanction compliance program. We do a lot of work for firms in the oil and gas industry, in the energy sector, in the transportation, construction, who by definition, it's not that one industry is more prone to corruption or sanction than others, but firms are going to operate maybe in countries where there are opportunities, where there's also high-risk jurisdiction. So we see those 4 or 5 verticals. What often drive things is the level of enforcement. So I said that the industry that I've mentioned often are the one where we see most corruption cases or sanction compliance issues. So these are the one where we see a lot more traction for what we do. But whatever you do, I think if you play internationally, you need to be careful.
Great. So yeah, I think we're reaching the end of the webinar. Again, thank you guys so much for joining us. We really hope this has been a helpful session. And if there is one key message that we want to leave here is that AML compliance should be an afterthought. It should be something that each company should start thinking about from day one, essentially because this helps them as a company to reduce any potential risk as they grow and predict any risk that they could face moving forward. So with that, we want to say thank you again for joining us. Feel free to reach out to us via email if you have any questions. I will be happy to move forward and answer your questions if you'd like. So thank you guys very much. Have a good one and enjoy the rest of your day.
Thank you.